In order to keep bringing you guys tons of free content, we work with brand partners who you'll hear from in this episode, including an advertisement from Zopa Bank. If you've followed me for a while, you'll know this has been a dream of mine since the very beginning of launching Talk 20s, and it's finally happening. We're launching 20s Fest in autumn 2023. To attend or get involved, head to talk20s.com. Welcome back to the Talk 20s podcast. You might be asking yourself, what's a tax code? How much should I be paying back in student loans? Why should I be worrying about pensions in my 20s? And is there a gender pay gap in my workplace? These are all questions I've asked myself, and I'm sure you've wondered at times. So today, we're going to get all the answers because we're joined by Abby Foster, chartered accountant and founder of Elent Finance. But before we dive in, a quick thank you to all of you who regularly recommend this podcast to all of your friends. Word of mouth is something we can never track through listens, but we know from chatting to you that this is one way we find new listeners. So thank you. Don't forget to follow and subscribe, and let's crack on with the show. Well, hello, Abby. Welcome to the Talk 20s podcast. It's a delight to have you here. You've come up all the way from London, Wimbledon?
Yeah, Wimbledon.
Amazing. Played much tennis?
Absolutely not. I went and watched some, but that was about as far as I got.
Oh, I love it. Obviously, a lot of people will know it for the tennis, but I'm sure there's a lot of other things going on in Wimbledon than just the tennis.
Yeah.
No?
Not really, but it's a beautiful place. I love it.
Oh, well, very jealous anyway that's the area of the world that you live in. Really interesting your story, actually, because we met, it wasn't even that long ago that we met in person, but and at the time I said, Abby, I'll have to get you on the Talk 20s podcast. But since then, tell us a little bit more about what's happened to you, because the world's gone a bit crazy, right?
Yeah, the Elent world, which is my company, has gone a bit mad. So when I think I was speaking to you, I probably had about 3,000 followers, and I was religious, I was consistent, I was showing up for those 3,000 people every day. And then I posted a reel on tax codes and payslips in general, and it got 1+ million views. Mm-hmm. And my following went from 3,500 to 50,000 in less than 2 weeks.
Absolutely insane. Let me just point out, that's not TikTok, that was Instagram
that was
as well.
Instagram,
which is crazy.
That was Instagram, which I just didn't expect. And yeah, it was all consuming. Mm-hmm. And I went from having 2 or 3 people do like my Sunday quiz when I first started it, which was like these 6 questions to do on a Sunday on my stories, to 1,000 people. Wow. And it was bonkers. There was no like smooth into it. I was hoping to do like I've got 5,000 followers. Oh, I've got 10. And then it just went 5, 10, 15, 20.
No time for celebration posts in between.
Absolutely no celebration time whatsoever. And when it exploded, I was also with wonderful friends, but I was on a friend's holiday for a weekend when it was all going off. And none of them are really that bothered about social media. So no one really understood the freaking out that was going on in my brain when my phone was just taken off. So yeah, that is what's happened since I saw you.
I love that for you. And I also love that for financial education, because one of our 4 pillars of Talk 20s is finance. We've got career, well-being and fun as the other 3. But like finance is a key part of like what we talk about, because we're just not taught enough about it in school. And I'll be honest, it's rare to see like a financial influencer go absolutely boom like that. It is usually a slow and steady kind of rise sort of thing. And it's amazing work that you guys do. Like I always say, it really is God's work, because no one is teaching this in schools, and we need to be taught it essentially, which is amazing to see. But we also had a clip very recently about kind of pay slips and how you kind of manage your payday routine, do really, really well. And do you know what? I'm here for it. The fact that people want to take like control of their finances and are, engaging with clips and content like this is really, I think it just shows the positive direction that the world is going in. So I'm loving it. One of the things that you spoke about in that exact clip is tax codes. And I think we might as well start there, seeing as it's the bit that made you blow up. Yeah. For our listeners then, tell us a little bit more about what you said in that clip and what they really need to know when it comes to pay slips and tax codes.
Yeah, sure. So tax codes, has become a bit of my trademark. Friends, family, anyone that knows me go, am I on the right one? And I'm like, oh God, okay, fine, let's go through it. So tax codes, it's very simple. We break it into 2. So you have a number element and a letter. And the number, the standard UK tax code is 1257L. And I say standard because that is what 90% of people have. But if you are in that 10%, don't panic. It doesn't mean it's wrong, but there are changes. So if your 1257 elements, the 4 numbers or numbers at the beginning are not that refers to something called your personal allowance, which is how much income you can have before you start paying income tax. And so the 1257 refers to the fact that in England, we get £12,570 worth of personal allowance. Mm-hmm. And that refers to the 1257. And then the L is just a standard UK tax code. But for instance, you could also see BR, which stands for basic rate. And that means you're being taxed like on all of your income. If the number's a lower number, so if it's like 1200, it means you're getting £12,000 worth of personal allowance instead of 12,570. There's a whole host of different things. You know, we could go through all the letters, like C on your tax code if you're a Welsh resident, S if you're a Scottish resident. Do you see what I mean? There's a lot of like anomalies to it, but the standard is 1257L. And I always say to people, if it's not that and you don't know why, first things first is like check it and like, you know, just do your own research. Have you had a letter from HMRC recently telling you why, or has your work emailed you to tell you? And then the next thing is to call HMRC. It's not a particularly exciting phone call. They don't have a very exciting phone like ringtone or anything. It's just, you just wait.
When you get put on hold, there's no fancy music.
No,
nothing like
none
that.
of that's what I'm looking for. There's no fancy music. It's the same music every single time. They do tell you, it's like a countdown. They'll be like, you are 8th in the queue. And you're like, oh yes, 8 more.
As an accountant, are you sick of that ringtone? Like, sick of that?
Yes.
Yeah.
Yes.
HMRC,
But I would say in their defense, because I know they get a lot of stick for being quite boring, the people on the other end of the phone are really lovely and they are people. So when you say to them, I don't understand this, they will help you. It's their job. They've got no ulterior motive to make your life harder. But with tax codes, the reason we go into them and why I'm talking about them is because if you don't realise that yours is wrong, you could be under or overpaying tax. Both are equally bad, to be honest. And that can impact your financial well-being because it means you have less or more money than you should have. And that kind of stuff is what we need to be fixing. And this is why we need to be teaching it, which I think is obviously why the video went a bit nuts, really, is because it impacts every single person every single month.
Absolutely. So, how do we know if HMRC owes us money?
Okay. So it's a tricky one. You want to call HMRC and you want to make sure that you're on the right, or like make sure that whatever's on there is right for you. And if they turn around to you and say you've been overpaying tax, then you could get what's called like a tax refund. And sometimes that automatically happens. HMRC will automatically send you your money back, or you might have to chase them. But the flip side can also happen where you might be underpaying tax. So you might have a tax code that's above what you should be getting. And that's not great either because you're going to then be hit with a bill.
No, that's worse. That's so bad, isn't it?
It is.
Everyone loves a nice surprise. Oh, I overpaid £60 this year. No one likes it. Oh my God, I owe HMRC £300.
Exactly. I think taxes in general, no one loves. And then to find out you've got an extra tax bill coming, that's not the one. But yeah, contacting HMRC is a really good idea.
So how can you avoid like those discrepancies happening? Is there any like good things that you should do? Like, I remember when I was younger and I had like a couple of different jobs and stuff like that my tax code was all like messed up. Or I started a job because I was at university and then I stopped it and then I paid tax on it but didn't know when to get and I think, you know, what's best practice?
So best practice is, if you are ever unsure, is to ask. I honestly don't work for HMRC, but I think I've mentioned it a million times already. But get this
podcast sponsored by HMRC.
To be honest, I'm sending a lot of people their way, so they're probably not my biggest fans. But it's to contact them and ask them and just check. You know, and the more you educate yourself, the less you'll have to ask. You know, I've got people that have been following the page for a long time now that they're like, oh, I know that BR means this. So when I saw it come up on my payslip, I checked it, I found out it was wrong, got it immediately changed, and then it was right and it was all fine. So just being really methodical and just checking your payslip, it's really boring, but it's actually really good financial health just to check it when it comes in. I think, you know, Budget Jones' Diary, like Beth was talking about it in her one that went viral. It's just good practice. It's not scary. You know, all you're looking at is the amount of money that's coming into your bank account anyway. So just check the little tax code on there and make sure it's right.
Well, if we carry on the topic of pay slips and things that come out of our pay slips after, well, like, you know, we've got our amounts and then we know that there's obviously national insurance that then comes out. Can you explain a little bit about what national insurance is?
So national insurance is the second employment tax. So on your payslip, you'll have 2 employment taxes, income tax and national insurance. And national insurance is the second income tax, and it creates what's called like the National Insurance Fund. And the interesting thing about national insurance, if you can call it that, is that you are, by paying into national insurance, you're actually gaining eligibility to something called the state pension. So when you hit retirement age, I think it currently sits at 66 and possibly rising.
It'll be crazy by the time we get there.
Quite possibly.
Yeah.
But You know,
Maybe like 105, here's your state
yeah,
pension.
it's just state pension. It's also not a lot. I think
Yeah.
currently it stands at £203 a week, which is not going to get you that far,
No.
especially if you live anywhere. I was about to say, if you live anywhere, it's
Let's hope
not
that amount increases as well by the time we get there too.
Oh, that's a whole other subject, because that is meant to increase with inflation, and I have a whole issue about that. But the national insurance gives you eligibility to state pension. So you have to have contributed 35 full years of national insurance contributions to be eligible for the full state pension.
Mm-hmm.
And not a lot of people realise that and always say to me, well, can I just opt out? If I don't want the state pension, can I just opt out of paying national insurance? Sadly, it's not how it works. You do have to pay both employment taxes if you fall over the allowance. That's national insurance.
And so to hit the national insurance threshold, it's usually it's similar usually to where the income tax is usually, isn't it? And so if you earn over that for like from the age of like 25 to 60, then in theory, you should be fine when it comes to state pension, right?
Yeah.
But if you have any missed years and you don't get it for whatever reason, then that's when you should start thinking. So like, for example, I know that my mum, she had kids and she didn't work during that time. My dad was like the breadwinner in the family, and she had, so obviously she wasn't earning anything. So she was actually like, I have to get back into work in order to be able to get my state pension, to be able to get my 35 years in before I can retire and even get a state pension. So it is worth thinking about. A lot of people do think, I'm just going to not work for a few years. Maybe you're traveling or stuff like that. It actually does start to have an impact.
Yeah, the years don't have to be one after the other. I always try to make that clear, because a lot of people panic, especially new mums, don't realise if they take gaps, what does that mean?
Yeah.
But it does have to be 35 to get the full state pension. There is a leeway. So between 10 years and 35, you get like a percentage. So let's imagine you did 11 years of national insurance, you get 11/35 of the amount.
Okay.
So there is a kind of, leeway between the two. But I would say, it can be quite a panic for people. And obviously we've assumed, like wrongly, many people assume wrongly, that it's just we're entitled to it and that we should just get it because we live in the UK. And actually, sadly, it's not an entitlement. There are credits and things like that you can get to boost up those years, but it's not a given.
Mm-hmm. Really interesting. And another thing, I guess, if we're looking into later adult life, and it pains me to think that we have to think about this in our 20s, but if we do think about it in our 20s, it helps us set us up for success for the rest of adult life. But why should we care about pensions in our 20s?
Okay, why? This is such a hard topic. So I do teach, obviously, in schools, and I have to convince people younger than 20 that pensions are a good idea. And you can see their eyes switch off when I start talking about pensions versus something more exciting like crypto
just have
and
a
investing.
little nap here on this pillow.
Yeah, and I also ask my students to give me feedback forms. And honestly, 9 times out of 10, when I ask them like, what was your favorite part? They all choose investing.
Yeah.
Every single one of them. No one has ever picked pensions. Some people have picked payslips because they've got a payslip and they find it quite funny and they want to know. No one has ever gone, do you know what? Pensions was just really exciting. No one. And it's really sad because pensions are quite interesting. They are effectively like investments, but why we should care about in our 20s is because of something called auto-enrollment. So when you are over the age of 22 and earning more than 10K a year and you're in a full-time job, you will be automatically enrolled into a workplace pension. And you need to understand what that means for you, because what it means on a basic level is that you are contributing to your workplace pension or your private pension, and your employer is also having to contribute. So you're bringing money to the party and they're also bringing money to the party. And what a lot of young people don't realise is that if they opt out, the business doesn't have to pay either. Mm-hmm. And so they don't have a pension. And that means that obviously as they get older and older, they're going to be having to put more into their pension pot to get the same amount than if they just even done a little bit when they were younger. We've talked about compound, we're going to talk about compound interest, I'm sure. And that's what you're trying to work towards when you're younger. And I know it's not very glamorous and it's not very exciting. It does mean you take home less money now, but your future self will thank you so much. You always have to be thinking, I always say, got to think about future Abby.
Yeah.
Always got to be thinking about future Abby, because like we've just discussed, the state pension is not enough to live on. It's not going to be there. We're not going to be able to live our best lives on £203 a week. It's just not happening. So we have to think about the workplace pension, and not to put a feminist twist to this, but there is something called the gender pension gap, where women inherently have less in their pension than their male counterparts. And that stems from those young ages where we're just not putting anything in when we really should.
With the cost of living crisis in the UK, we're all feeling the pinch. That's why we've teamed up with our sponsors, Zopa Bank, to help our listeners understand their finances better. If you're worried about your financial situation, you may want to download the Zopa app and check out their borrowing power tool. It'll give you a clear view of how Zopa see your financial health with a simple 1 to 10 rating, with 10 being that your financial health is in good shape. With this knowledge, you'll have a great understanding of your financial resilience. And if your score's not a 10, it'll give you personalised tips on what you need to do to improve your score over time. Head to your app store and search Zopa. You alluded there to compound interest.
Yeah.
And I think it's, it kind of actually is something that we do learn in maths, like in school and stuff, but not necessarily in a way that kind of I felt like it would. I think I did it like, Tom has £3.62. He wants to invest it, whatever. But I don't think I really ever took it that seriously.
Yeah, I did maths at A-level and I'm almost certain I didn't really understand it.
No, me neither.
I wasn't really paying attention. It wasn't very interesting. But when it comes to your own money, it gets really exciting.
Exactly, yeah.
The basic, like a way to explain it from a real, like just basic level is that you start with, let's just imagine you put £10 in and you know that you're getting a 10% return. So you then next year you have £11 and the compound interest effect is that next year you can have that same 10%, but it's not going to be on the £10, it's on the 11. So then it's even more and even more. And it builds, it does that rather than just like steady.
After year 2, it'd be £12.10.
Yes.
Yes.
Well done. I'm so glad you did the maths quickly for me because I was...
If it's wrong and people go, she got the maths wrong.
The panic in my eyes then, I was like, oh God. I did maths at A-level and I did an accountancy degree. I've done like a postgrad, mental maths. I sit there and I'm like, oh God. When I'm at home on my own, I'm fine. But I think it's the stage fright.
Cameras here. Yeah.
It's the stage fright because obviously I'm an accountant, so I should know what I'm doing. But yeah. Yeah, definitely.
So over obviously loads of years, you're going from £10, £11, £12, 10.
Yep.
That just goes and goes and goes, right? So even if you don't put in more money, that amount is still in there. But say you were to put that £10 in 10 years' time, it wouldn't get to the same place that we're talking about when it comes to the compound interest, right?
Yeah, you're sacrificing so many of those years of building up wealth. And and can I just explain as well with pensions? Pensions are investments. So people think of pensions and investing as complete opposites. But when you put money into your pension, really, it's just someone else is doing the investing for you. So they take everyone's money and they invest it into different things. And then hopefully once you hit retirement age, which for your private pension is sits around 55, I think, right now, that's when you can take your money out and it should be worth more than it was to start with. And the compound interest of the fact that when you're younger into a workplace pension and your employer has to put in, you're putting in 5%, they're putting in a minimum of 3%. That's money that you weren't getting before and you won't get if you don't choose to put in. The one good thing with auto enrollment though is that if you do opt out, so let's just say you're 22 years old, you've been automatically opted in and you go, I want the money now. I don't want to wait till I'm 55, which it's fine. It's a choice you make. Within 3 years, you will be automatically opted in again. So just be aware. Like I think it's a good thing because, if you're 22 and you've opted out, you might have a different money mindset by the time you're, 25. And it might be a nice reminder to be automatically opted back in again.
Yeah, definitely. I think a lot of people do just think, I don't know if I can, I don't want to think about future self like in that moment in time, because a lot of people are just like, if they get this certain amount, and usually when we're all on starting salaries, it doesn't feel like a lot of money, especially in the times we've got right now with the cost of living crisis. It can be a real issue. Like a lot of people are, I want to keep all the money that I need right now. And it's really hard sometimes. And I know so many people will be able to relate to this. It's really hard to just think this is going to help future me, like in far off distance. Yeah. Because I often think about future me at 60 and I'm like, oh, she's like, she's a gazillionaire. She goes on cruises all the time. She just lives her best life. But I don't really know how current Gabs is actually going to get to that gazillionaire that goes on cruises all the time. Yeah. Do you know what I mean? Like,
I know exactly what you mean.
Something has to happen between now and me being that woman, but I guess it's paying into my pension.
I think, do you know what? I like to talk about like self-care, and I think it's just another thing to add to your self-care list. Like, a lot of young people, treat like going and getting their nails done or getting their hair done as self-care, and that's brilliant. And I don't I don't dispute that at all. I think it's really important to look after yourself with your money, but add those investments in your money self in the future as self-care. It would be like, it can be minimal amounts that over time build up into this like huge pot. And it's just a nice thing to see when you're hitting retirement that it's there. But yeah.
Absolutely. So we kind of talked about the ways that we're going to reward our future selves. Well, taxes, no way we can get out of that. Rewarding our future selves of pensions and investments. But another thing that we feel like many of us will be paying for coming out of our payslips is student loans.
Yes.
Can you explain to us a little bit more about how student loans work?
Yeah, of course. So in the UK, we have different plans. So if you went to university pre-2012, you will be on what's known as Plan 1. If you went post-2012 to 2023, if you went to uni in those years, you'll be on what's known as Plan 2. And there is now a new plan that comes into play from September 2023 called Plan 5.
What about C?
What
was it? A, B, C?
No, it was 1, 2.
Oh, sorry, I wasn't even listening.
No.
1, 2, 3 would have been better.
It would have made loads more sense. But there is already some other plans going on, so like they just skip to 5. It's confusing, but
they confused me, and I was on letters, and they were on numbers anyway.
Yeah,
so
it's Plan 1, Plan 2, and Plan 5. But let's just imagine that most of your listeners in their 20s, they are most likely on Plan 2. That means that you are paying, if you've taken out the loan, which is like a mixture of tuition loans, so paying the amount you pay to your uni, and your maintenance loan, which is what you get to spend on bills and life. The combination of that, once you leave university, you have to start paying that back, but only once you earn over a threshold. So it's sort of like a tax. I think like the patron saint of financial education himself, Martin Lewis, calls it a graduate tax, but it's actually more like a university tax because you don't have to graduate, sadly.
True,
obviously, if you do a year, you still have to pay that year back. They don't give you an exemption just because you didn't feel like finishing. But what happens on Plan 2 is once you start earning over 27,295, you pay back at 9%, which is why it has this kind of tax effect to it, because it's like a tax rate. You pay back what you can over the amount. So I always say to people, the student loan cannot bankrupt you because you don't pay until you can earn enough to pay. That's just how it works. It is a lot. There's no beating around the bush. And there is a lot of that, especially because it rose from like 3K a year to 9,250 in a jump from 2011 to 2012. And it can mean that some of our student loans are sat there in their 50,000 even plus.
Mine is ridiculous.
Yeah, that's not a good one. My dad once opened the letter by accident because I think I was away and I asked him to open some of my letters. And he like freaked out because he did not go to university. And so he does not understand student loans at all. And he called me like really stressed out. And he was like, it's okay. We'll figure a way to like pay this off. Don't worry.
Oh, I love your dad.
He was like, we won't tell your mum. It'll be fine. Don't worry.
We won't tell your mum.
I was sat there on the other end of the phone just having such a giggle because I was like, don't worry, I got it. He was like, how have you got that? And I was like, I don't have that money, but I'll pay it when I can. So yeah, it is effectively, it's called a loan, but it's more like a threshold tax for when you graduate.
And also, am I right in saying that whatever we've got is also accruing interest?
Yeah.
Whilst you're not doing so. Say you don't hit that 27K for a little while.
Yeah.
That doesn't mean that your number stays the same, that you have to pay back because that's gathering interest as well.
Yeah. Again, another common myth is that it's got no interest on it. And it's because years ago they used to say like, it doesn't have interest, it just grows with inflation. And effectively that's the interest. And obviously we all know, we've not had our head in a rock, that inflation has been bonkers over the last 2 years, especially last year with the highs of like 11% and up. Yeah, the student loan got out of hand and interest on student loans were crazy, far outweighing those interests on other like consumer loans. So yes, it doesn't just stay the number that you end uni with, it does grow with interest.
But am I right in saying that it gets wiped after a certain amount of time?
So with Plan 1, it's 25 years and it gets wiped. Plan 2, it's 30 years and it gets wiped. Plan 5 is 40 years. Yeah.
God, they really have got the next generation, haven't they?
This is what angers me the most is obviously, and I'm there in classrooms at the moment teaching and speaking to young people, and they know they're being handed a rough deal And I can't stand there and lie and be like, no, it works actually better for you, because it doesn't.
Yeah.
What they've done is, I think with Plan 2, only 22% of like the debt landed on the student, and obviously the other percent lands on the taxpayer because it comes out of government debt and things. What they're trying to do is shift so that over 55% of it lands on the student now. So with Plan 5, you start paying back when you're earning over 25k.
Okay, so a little bit earlier.
The repayment is 40 years. So there was like headlines everywhere, like students paying back loan into their 60s, and that is a realization that that can happen. So they start to question young people when I speak to them. Is it worth it?
I was going to say, is it worth it to go to university now?
Honestly, it's a huge question. I think if you're asking me, I would say it depends. And like I say, it's a case by case basis. Like, I'm not sure with my university education that I used it for what I was meant to be there for. Like, obviously, I got an accountancy degree, but the main thing I got out of university was the experience, and just being able to live alone and, have that like life, I suppose. And that's what and I don't regret going to university. And I don't regret spending the money. But for younger people, there might be another way that so now more than ever, we're talking about apprenticeships. You can even get sponsored to go to university, which is something I don't think is talked about enough. There's a lot of companies that will sponsor students throughout uni. Tends to come with quite heavy contracts. So you have to work for that company after and stuff. But there are ways to reduce that cost. But whether it's right for everyone, I don't think it's right for absolutely everyone. But I'm glad I went.
Yeah, I'm definitely glad I went too, but I think if I had to have my time over again, I'm not sure. I think I would maybe have chosen a different route. I don't know. Yeah, I mean, like you said, like I think I got amazing things out of it. Like I really wanted to move out from home, and I got to travel abroad and all that kind of stuff, which was amazing. But then maybe I wouldn't. I just think it is quite a lot, isn't it? And so for anyone who's graduating this year, are they still on Plan 2?
Yes. Yeah, you have to start September of this year to be on Plan 5.
Right now that will be going on to Plan 5.
So anyone that's going to university this year will be on Plan 5.
Okay.
And there was obviously a big conversation about it last year, because obviously I was in schools last year teaching, and a lot of them were talking about deferring a year. And we were
oh my gosh,
just think that through, because the change is vast between Plan 2 and Plan 5. So yeah, have a little think. But now it's come into play, so there's not much you can do.
Let's talk a little bit about the gender pay gap then. Yeah. What is the gender pay gap for someone who doesn't really understand it?
Okay, the gender pay gap is the best way to explain it. And actually, sorry, I'm going to start with the gender pay gap is not what people often think it is, where men are paid more than women for the same jobs. That's actually illegal. And when I ask, especially young people, or if I go into workplaces and I teach about the gender pay gap, a lot of people say to me, well, it's because men are paid more than women. No, that's actually illegal. And because of like the Equality Act that was brought in the 70s, like that shouldn't happen. If it's happening, you definitely call that out, because that's illegal. You don't let that slide. But the gender pay gap is slightly different. And the best way to describe it is if you imagine a company, and you have people from lower, from intern roles all the way through to C-suite, so like your CEOs, presidents, etc. The gender pay gap happens when or a worse gender pay gap is when there are more women in these like lower roles, so the ones on lower income, than there are on the C-suite roles. So let's just imagine you're in a company and 90% of those that are earning between 15 and 40,000 are women. But then once you hit to the C-suite roles, so those earning like 100 and 150k plus, it flips the other way, and you tend to get 90% men in those roles. And that's where the gender pay gap is happening. That's the issue, is we're not seeing the average earnings across both genders kind of coming to an equilibrium, because you're seeing most of the lower income roles held by women and most of the higher income roles held by men. That is a complete generalization, but that is effectively what the gender pay gap is trying to represent. And when companies are made to report their gender pay gap, which most companies are starting to do, what they're trying to show is that they've got an even spread of men and women in all of these positions at all levels. And we're not losing women as we get to these C-suite positions. And yeah, it's really important. I think it's really important to talk about.
Mm-hmm. So what are our rights then as women against our male colleague and counterparts? How can we call out if we see a bad, like a negative gender pay gap? How can we call it out? How can we even go about that conversation?
That's so tricky. I think it would depend on the business. And I'm sure most, if not all companies, have some sort of HR function, and it's worth talking to those people and having those discussions with men as well. I think, there's so many great women that have done great speeches over the last few years, like Emma Watson's like He for She campaign, where she said it's not just about women calling themselves feminists and people getting afraid. It's about bringing the men in as well and understanding where does their position lie? What should they be doing to help us? What can they be seen to be doing? I think there's nothing worse than having a male president, CEO, telling a group of women what the gender pay gap is in the company and saying like, oh, it's just what it is. Like, you should have more women, like more visibility, that kind of thing going on.
Do you think it's something you should look at before you start a job?
I would, but that's just me and my personality. Like, I think I do have a little nosy about most people's gender pay gaps just because it's interesting to see.
And is it visible clearly online?
Not everyone has to report it. A lot of people voluntarily do, and some people are asked to. And you can have a look at it. And I think it's not necessarily what their number is, but what they say in the report they're doing to fix it. I think that's what's important, is in the reports, they will often write, this is the number, this is why, this is how we're doing good things for people. We're financially educating our young people. Great idea. We're doing things to support female leadership roles, that kind of thing. That's what I would be looking out for if I was looking for a role now. If I was looking for a role, especially in a big company, what are they doing to support women getting from A to B? Because that's not always been there.
Amazing. Well, I've loved chatting to you all about pay slips and what we can understand from what we get paid, essentially. It's been really fab to chat with you. But we always love chatting to all of our guests about some of the adulting failures that they may have had in their lives. Because although you are a finance and accounting whiz, I'm sure there are other areas of your life that you feel like you might have made a mess up or two. And it kind of just makes everyone feel a little bit more human. And it's always really nice to talk about. So is there anything that springs to mind when we talk about adulting failures?
Yeah, I think my biggest, and it was something that I really stressed about at the time. And I think you said to me before, what's something you can laugh about? And I thought about it. It was failing my ACA exams. So I did accountancy at university, and then I did my ACA, which is 15 more exams after university that you do whilst you're working. And they give you the charter, so you become a chartered accountant. And when I started the ACA, I did it purely because a friend that had left uni the year before had done it, and I knew she was sort of on good money. So I thought, well, then I'll do that. And I started the exams and realised yet again I was in a room full of incredibly intelligent people. When I was at college, this was for the exams, that could sit exams, no problems. They would just sit an exam, pass it, move on to the next. I've never, ever been blessed with that. I'm dyslexic. I come from incredible parents, but parents that didn't necessarily, I think they both left school quite early. Exams isn't really part of their world. And I started sitting those exams, and I got a bit confident, because I started passing them, and then I had a really big blow, and I think I failed 2. Oh, no, that's not true. 3. I sat 3 at one go, and I failed all 3. And it broke me, because when you fail an exam at school and you need to retake, there's no real economic impact to you. But when you fail one of those postgrad exams, you have to repay to sit it. So not only did you fail, which is enough of a blow, you then have to pay someone to sit them again. And they're not
failing your driving test, isn't it? It's very similar.
Exactly. But they're not cheap. And I had to sit them, and I was so hard on myself. I think they say nowadays, don't they? Fail, but fail fast. And at the time I failed slow. I honestly dragged everyone into the depths of sadness. And I thought the world was ending. I wasn't good enough to be an accountant. That was it. Give up. Full honesty, I did have a bit of a young midlife crisis and just went to Australia for a few months, because I was like, I can't do it. I tap out.
Really? Yeah, really. struggled.
Yeah.
But do you know what? That's reassuring to hear, because you're sat here now owning an incredible company that you've worked really hard for.
Yeah.
But it's all good to know. Like, it's good to know from our perspective that everyone has a bit of a wobble sometimes, and not everyone has this very clear path and trajectory. I think it's really reassuring, to be honest.
Yeah, I just wish someone had, because I was around a lot of people that had never, ever failed an exam. Never. Like, failing an exam just wasn't in their remit. They had all come from, you know, the top universities, and they were working for the big four. I was doing it slightly differently, but I was trying to be amongst them because I wanted to be at college with them because I thought it would help me. And actually, it was really hard, and I had to really pick myself back up. And then I ended up with a tradition, which I find really funny, where I decided when I went back to sit the exams again, I was like, right, if I'm going to do them, I'm going to do them my way. And I think for the first sets of exams, I used to go in like a black suit because it was still quite formal at the time, and you'd sit in a room full of people and do your exam. I scrapped that. The next exam I went to, I turned up full pink Juicy Couture tracksuit. And it had like Juicy on the back. And like I walked into the exam like space. Everyone was looking and was like, honestly, the guy that I walked up to was like, are you here for the exam? I was like, yeah.
Full Elle Woods vibes is what you're giving me.
This was the thing. I just was like, what would like, you know, confident Abby do? And that was it. And then that was it religiously. For every single exam, I wore that tracksuit. And
I love that.
I just felt like I had a giggle to myself, because those situations are really intense, and you need to find space in those times to laugh at yourself. And I would sit there, and I remember the first time I wore it, and I was sat doing this exam, and just halfway through the exam, I just caught the fact I was wearing pink again and had a laugh, because I thought, no one else in this room, everyone else was wearing black, and it's just what they were doing, and they were all head down and like so stressed out. And I was there, and I was like, it's fine. I got pink on. Like, what's the worst that can happen?
Yeah.
So yeah, I think the failing of my exams was hard, but it taught me how to kind of bounce back and adapt it to suit you.
I love that idea of like, what's the worst that can happen as well, because I think we stress so much in our 20s about what, you know, if I fail this, I failed my whole life. And that's just, it's way too much pressure to be putting on ourselves. And realistically, what's the worst that can happen if you do fail? Like, you resit, you save a bit of money, and you pay to resit again.
Yeah,
you know?
like I'm at the end of my 20s now, and I won't say that I figured it out at all. I really, really punished myself when I failed those first exams. And actually, I just wish I'd seen someone else, or someone else had said to me, don't worry, I failed them too. Because I looked around, and maybe I was just in the wrong circle, but I looked around and no one else had failed. And I just assumed that was it. I was the only person that had ever failed those exams, which is just not true.
No, I know they're really hard as well, so I bet you aren't. One of the other things we like to talk about on the podcast is like something that you're going through right now that you're trying to get better at. Obviously, like you just said, you're at the end of your 20s now, but by no means are you the finished product. And I think that's what we really try and promote, is that like we're all like trying to get better at something in our 20s as well. So for you, what's the one thing that you're trying to get better at right now?
So when I was thinking about this, I actually said exercise. I'm going to change it, because now I'm sat here. The one thing I need to get much better at is taking a compliment. And I think that was for most of my 20s has been the exact same thing. And I think I've developed better ways of faking it, but I'm not very good at taking a compliment at all. Or, you know, someone saying like, oh, it's going so well, especially with the rise of Instagram, the wash of people that are in my life right now that are saying like, congratulations, everything's amazing, you must be so proud. And I'm there and I'm like, is this someone else's life? And then I'm not really sure what, I don't know how to take it. So I just say, oh, thanks, and move on. Or I'll just send like a emoji heart, and because I don't know how to take it. And I wish I haven't learned that yet, but I wish if I could go back in time, I could teach it to my 20-year-old self, because I think I would be a much bigger person now, or not bigger, but a much calmer person if I could just take a bit more compliment, take a compliment a bit more.
I think a lot of us just that shift to be like, oh yeah, thanks. I think we've all done it. Like I think we can all really relate to that, but it doesn't really, I feel like you don't internalize it. You just brush it off as like, oh, they don't really mean that. But like, but of course they do. Like otherwise they wouldn't say it. And I think it's nice to every now and again to be like, oh yeah, have done a good job and I am proud of myself. And I don't think we ever do that enough.
I think so I always hope to be a really big cheerleader to my friends. Like anytime they move, I am like so proud of people. I'm like, you've got this. And like anytime, complete strangers as well on Instagram will tell me that they checked their tax code and that actually they got a tax rebate and they were so grateful. I am there with the banner. I'm so excited for people. And I just wish I could internalize that myself and like accept it for myself a bit more, because I think, and I don't talk about it a lot with people because I feel like it's a bit embarrassing. Like, you're meant to be running a business. How can you not take a compliment? Like, you're a big girl. You wear big girl knickers. You you take it on. But yeah, I think that's something I need to get better at. And I think young people are better at it, if I'm honest. Like when I speak to young people, they've got a self-awareness that I definitely didn't have when I was in my teens and 20s. But yeah, I wish I could change that.
Hopefully the next generation will be better at taking a compliment.
Fingers crossed. Who knows?
Well, Abby, it's been amazing to have you on the podcast. Thank you so much for all the wise words you have shared with us. I've absolutely loved chatting to you. And I cannot wait to see how your kind of personal brand and your business grows over the next few years as well, because it's honestly just the beginning. I can totally tell. But we always end the podcast with the same question that we ask every single one of our guests. And it's if you could look back at 20-year-old Abby and give her just one piece of advice that isn't the thing you just said about compliments, another amazing piece of advice, what would you say to her?
I would say people's opinions aren't your facts. So when I was younger, a lot of people told me what I should be doing or what was right to do. Especially being an accountant, I should have gone to a Big Four, and the fact I wasn't at a Big Four wasn't like right. But for me, the fact was I didn't want to be in a Big Four. I didn't want to have a corporate life. I wanted to work in somewhere glamorous, and so I went and worked at Condé Nast, which is Vogue. Publications, and then I worked at another publishing house called Hearst, and that was what suited me. So yeah, people's opinions don't always have to mean your facts, I think is something I wish I could have told my younger self.
I love that, and what an amazing little story to kind of finish the podcast with. I think, everything looks different to everyone, and you don't have to follow on that same trajectory and that same path as everyone else.
Yeah.
And a lot of the time people do think accounting Big Four, and they don't think that obviously magazines need accountants too.
They do. Everyone needs finance.
Yeah.
This is the thing. You don't have to limit yourself.
Yeah.
But thank you so much. This has been so fun. I've forgotten we're being filmed, and I now keep casting my eye.
Oh, well, it's been amazing to chat to you. Thank you so much for coming up to the studio. I'm sure this won't be the last time we see each other.
No, hope not.
Amazing.